Good afternoon, everyone. You're all very welcome to our latest interview in the Alpha Capital Group Trader Interview Series. Today, we've got JT. Very, very welcome, sir. JT bringing us all the way over from stateside in the US, from Atlanta. Good afternoon. Yes. Good morning, sir. How are you doing? Good afternoon.
Great. Great. How are you, my friend?
I'm not too bad at all. Not too bad at all. I hope you're doing well over there in the US. Yes. Very, very welcome to today's call. It's great to have you on board, and obviously representing your own community as well. So I suppose really without further ado, JT, do you want to introduce yourself? I'll give you the floor, sir.
Yeah, so my name goes JT, and I'm owner of Find Your Edge Trading. We've been a Discord in a community for a little under 3 years, about to be 3 years here in a little bit. And I myself have been trading for over 18 years, started trading when I was 17 with my custodial account. My grandmother got me a custodial account. And I thought it was really cool, interesting, and I decided to pursue finance in school. And it was really an interesting time because I was in the midst of the financial crisis and everything else. So really an amazing time to learn about the markets. So that's really my background. I've always had a fire for the markets ever since then. And when COVID came around, I came across Discord and communities that weren't available back then. Back then we had Yahoo message boards and things that you really couldn't communicate too well with people. And now it's really great with social media and everything else to be able to have a community. So
you're very much old school from past to present and obviously now towards the future, for sure. So you've been trading 17 years. So you've seen an awful lot in your journey. You've seen the banking crisis of 07, 08, obviously trade wars in the last 10 years, obviously under the Trump administration with China, COVID, high inflationary environments. So you've seen a lot of changing market dynamics over the last number of years.
Yeah, I remember the European debt crisis after the financial crisis. That was a very interesting time in the markets. I remember even during COVID, which I really wasn't as active early on in COVID. But I remember trading after that. And then there were so many volatile days afterwards. It's really an amazing journey to go through all these markets and then realize that not every market's the same. And you have to be able to adapt every time the market changes. And I think it's very funny because now we've come into a different market in 2023. A lot of the people that started in 2021, after COVID, when COVID started, it was a different market. And then they got introduced to what I like to call the real market, where everything started to act a little more normal, not everything going straight up. And it's just it's a nice journey to be able to understand that when you need to adapt. And so that's really what I love to do, is to help people figure that out.
Yeah. And I suppose it's the changing market dynamics from a very, very bullish 2020, 2021, particularly after the COVID crash, to now it's a baptism of fire for a lot of people, because it's not just easy money every day.
No.
Definitely.
Can't just go long on anything and then just watch it go up for 2 weeks and make money.
It doesn't really work like that, unfortunately. So I suppose within your strategy that you're implementing, I know obviously as a funded trader, do you want to maybe talk us through a bit about that, the assets you trade, kind of how you approach the markets on a daily basis?
So I primarily focus on the NASDAQ. NASDAQ is the one thing that I like to trade the most, has a lot of volatility. And the way that I like to trade is I'm primarily focused on price action along with the implementation of volume profile. That's really what I like to use a lot. And I kind of handle it a little bit differently, and I teach it a little bit differently. I see the way that other people like to talk about it, but I'm more focused on watching the market tell me where the money is, where the most volume is, and then just gauging that. I also look at the market a little bit differently in the sense of, I like to look at the candles as like a psychology about how people feel in that candle. For example, in this 15-minute candle versus the last one. Okay, how are people feeling? Are 100% of the people in pain, or are they 100% of the people happy with the last? Let's say if we close above the candle's prior high, that means that everybody in the last candle is making money. So there's a psychological effect to that, and those are just little things that I do for myself, and kind of like the staples of my trading. So and I use that for entries, exits, etc.
So you're looking at the overall dynamics of the markets, including sentiment, trying to find fair value, I guess, in the approach, and then
Yes,
obviously
yes.
looking to take advantage of that. Very interesting. So then within the volume profile element, is that like market profiles, like, or
So
specific,
I
or is
do.
it slightly different?
So it's more specific, wave to wave. So I like to measure it out. Also, I like to look at, like you're saying, fair value. I've kind of developed a way of interpreting fair value each day or each week or even for a year. How the market can interpret, okay, this is fair value, this is, discount, this is premium. Being able to understand that. Um, I'll be honest with you, my friend. I haven't really seen it anywhere else, and I'm not just saying that, but I feel very confident with this fair value model that I developed last year, and it really helps me figure out good opportunities for entries and when to say, hey, maybe the market's getting a little toppy here. So
Interesting. And I suppose with your strategy, I know you're obviously centralizing around the Nasdaq primarily. Would you be then, I suppose, volume profile, are you, or the volume weighted side of it, are you intraday trading perspective, maybe short time, or are you maybe looking to hold positions for longer, or
so
what's your general approach?
most of my trading is day trading. Now that being said, I have the tools that I'm using can be used on multiple time frames. It's just being able to adjust them for that and other assets. It's not just the Nasdaq. I have actually gone and back tested this through, whether it was individual stocks, whether it was, other indices, whether it was metals like gold or even euro dollar, something like that. I have gone through to make sure that this is like something that would work for me in any market, because as a trader, you have to be able to understand that sometimes the market that you like is not going to move as much as you would like. And then you're stuck trying to make money on a market where there's another opportunity somewhere else that you might be missing.
Fair enough. Interesting. So it's quite different than the usual retail supply and demand, support and resistance, trend. It's going to a much deeper level, really, within the consciousness of what you would look at from entry, exit, and I suppose trade management as well. In that regard, it's very interesting. And then I suppose with the volume, do you take fundamentals into consideration, or are you just solely just volume based primarily?
At this point, fundamentals have become, I want to say, less and less important. It does, and I say that because I started, right before the financial crisis, experienced all of that, went through all that news flow, everything else, all these other markets that I've experienced. It's been very interesting now because, I look at how when the Fed started raising rates back in October or November of this past year, people would have thought that the market would have gone down from that point. But fundamentally speaking, rates have gone up and the market has gone up. So it's been an interesting time. The news flow has been coming in, and fundamentals are not necessarily playing as big of a role as they maybe once were. So I don't necessarily, I think the problem with the fundamental analysis when it comes especially to trading, the NASDAQ or whatever else, is that you start to develop a bias when the market technically is telling you something completely different. And that can be sometimes a bit of a crutch for people. Is like, but I don't understand why we're going up or why we're going down, because, these numbers were this and it doesn't make any sense. Well, at the end of the day, the market doesn't care, right?
Yeah.
Ultimately, the market's going to do what it wants to do.
Yeah, interesting. And I suppose as well, it's going back to the old adjective of, I suppose, trade what you see and not what you think. Particularly for obviously volume, because of course, if there's more volume coming through, whether it's volume, whether it's ladders, whether it's even just simple candlestick analysis, if the overwhelming majority is clearly alluding to bullish price action, well, then of course the markets is going to continue grinding higher, which is a very clear analogy, which is important. And I suppose then looking at the strategy and looking at your experience, many years of experience, different cycles, the idea of risk then really becomes paramount in I presume in everything you do, I guess.
Mm-hmm.
For sure.
Yeah. So for me, and this has been a crutch for me to understand at the end of the day was, and I think it's one of the biggest crutches for traders, is when you determine risk, it's not necessarily, people think of it, and I think a lot of retail has gone to options and things like that, and they think of things in terms of, percentages, when in reality, for me, risk is like, hey, I'm risking $500 on this trade. Okay. And what that $500 is how many lots according to my stop. And that's where there's this big confusion. It's like, well, I'm always going to take 40 lots on a trade on NASDAQ or whatever. That doesn't necessarily equate to the same risk every time, because if your stop loss was 5 points one time and then 20 points the other time, your risk is totally different. And I think that we don't understand very well. And it seems like something that gets left behind. They think that they have to trade the same size every time, and it's not really just that. Again, it's just the risk. And for me, that's been a big thing for me to drill into my process, because I know that what I do has a good enough win rate given my risk reward to work out whenever I take trades. But if I'm not putting the equal amount of risk into every trade, I'm going to eliminate my edge, and I don't want to do that. So, that's kind of like where my thought process is on all of that.
And goes back to obviously find your edge, which is something relevant to you, of course. Yeah, well, I suppose it's very, very interesting, because as you say there, if your stop is 10 points and then your next trade is 20 or 30 in the stop loss size, well, then your risk is very skewed across the board. So if your 10-point stop loss loses, but then your 20 or your 30 wins, you don't have a reflective, true value of the risks that you're taking on relevant to the exposure of your book or your prop firm account or private account or whatever it is, which is incredibly important. And then obviously with the risk then comes the emotions, which I'm sure which you've seen plenty of. And I suppose from your experience, how do you, because you mentioned there a few times about process and building that sustainability factor into everything you do, making sure there's like no stone unturned, a clear process. How do you handle your emotions in that regard?
So I myself have become kind of stoic in the way that I like, very stone in terms of emotions at this point, whether it's wins or losses. Whether I'm winning on a trade, or I don't want to say winning, but whether I'm being successful on a trade or whether the trade is not working out, I don't look at because I cannot look at any one outcome and start to become prideful in that outcome, because there have been times in the past where I've had great success. And then because I have gotten prideful, because I have gotten thinking that I was somewhat invincible, that I was humbled very quickly, and I think that every trader goes through that. I feel like that's happened a lot more recently as well, given the fact that the market was going up for so long. People had made all this money, and then all of a sudden it's in drawdown. People don't know how to handle markets in drawdown. And then, and then it reverses back. But there is a process that, I'm big on psychology when it comes to trading. And I think that one of the most important things is, like you said, finding your edge. Now, finding your edge means, how does that tie into your personality? Because each and every one of us is different. So we cannot all trade the same strategy, because we will not handle the strategy the same as the other person. So that's why, what I decide to do may not work for you. You may not be able to understand it, or it may not be able to latch onto your your personality, and then that may affect your foundation as psychologically or whatever else. And likewise, in turn, somebody else's strategy won't work for me because it's just not how I handle things. And so that's why I think it's very important to figure out something that you can maybe understand, but then figuring out a process, a trading plan, a ability for you to understand that when you put on a trade, it's an emotional decision, right? And that emotional decision, as humans, we can't take more than a certain number of emotional decisions in a day. So, I like to stick to 1 to 3 trades a day, because if I can get if I just have to figure out how to get done with 1 to 3 trades a day, and if it doesn't work out, it doesn't work out. You have to come back tomorrow, because if you continue the process, you are just, I want to say, stirring the pot of your emotions, and you're allowing your foundation to have cracks. And then once your foundation breaks as a trader, you're susceptible to anything. You can blow everything up in a single day if you wanted to. Anything is possible.
One bad day away from failing an account, I suppose, is the accurate way of looking at it. I think it's
every single day.
Very, very interesting, because it's like anything. A deviation from strategy and your plan then brings in the indiscipline. The indiscipline then removes all control you have over your account. And then when you lose that control, everything else just completely falls like a house of cards. And that's pretty much exactly kind of what you're kind of talking about, you're alluding to. And I suppose within your risk then and the emotion side, what would be your daily tolerance in terms of risk and exposure on your book of business?
So usually I like to risk no more than 2.5% of the account in a day when I'm trading, because I'm not looking to, first of all, go past the rules. At this point, I've primarily moved as a prop trader because I see the benefit of working with somebody else, not having the mental. Because what I have noticed, especially with other traders, is having the ability to lose all of your money, your own money, in a single day can be such a strain on a single individual. And when you have the capital that gives you the ability to, trade your process that you normally trade the way that you have learned your skill, and to do it effectively, then all you have to do is, again, bring that discipline and those risk parameters into play. So, again, primarily, I'm not looking to lose more than 2.5% of the account in a day, because I can come back tomorrow and do it again. I can honestly tell you, and any trader that doesn't tell you this is lying to you. There have been days where that doesn't happen, and I go past my rules, and nobody is perfect in this world, and that's what's so funny to me, especially in this space, is everybody comes off as some sort of like superhero or superhuman, and it's like, listen, I know there are days where you guys are also struggling, and you're just not being very forthcoming about it. So I feel like it's important for everybody to understand that we're all retail traders, right? Nobody's here is really truly a professional unless we worked at an institution. We're not a professional, but we are susceptible, just like anybody else, to make human mistakes. And even though we'll come across those mistakes, we have to learn how to grow from them and those failures and those lessons. I like to journal what's going on in my life, not only in my life, but also in my trading, from a day-to-day basis, and kind of write it down, because sometimes you can kind of connect the dots where, if I've got too much going on in a day, I just won't trade. Perfect example was yesterday. Had a lot of stuff, family going on, family business. I decided not to take any trades, because if I put on trades in that time frame, I'm already emotionally occupied somewhere else, and I cannot do that. As a trader, we have to be 100% in on whatever we're doing. What I wanted to say was this: I don't feel like people understand how important it is to take 100% of the time that you have focus on trading. Meaning for myself, if we'll probably have to restart this somewhere, but what I'm saying is this. What I'm saying is this. So what I like to do is set aside a time of day that I'd like to trade, which for me is between 9:15 Eastern to 11 o'clock Eastern. And I dedicate 100% of my energy towards that time frame. And I do that because I want to be 100% focused on that. And then when that's over with, I can focus on everything else in my life after those times and not on trading, right? And I feel like a lot of traders don't do that. They don't set aside a particular time frame where they want to trade, where it works best for them. And they're always trading all day long. Meanwhile, there's no decompression. There's no, you forget about everything else you got going on in the day. I mean, 95% of us have other jobs going on. So we need to be focusing on those jobs when we're not trading, and not trading while we're at those jobs, because you're spinning plates and then eventually those plates are going to fall all around you. And you're never going to be successful without setting that time aside to trade.
Interesting thoughts there, because like in my mind, you've got like complete and utter focus on what you're doing, and making sure that there's no distractions, no outside circumstances impact upon those decisions. And I guess making sure that regardless of whatever may be coming on outside of your life, shall we say, making sure that there is conviction and there is total clarity in terms of what you're doing. Because of course, if your mind is somewhere else, then really are you in the mindset to be taking positions, taking risk, making emotional decisions, as you say? Because of course, then in the background, that affects your focus, that affects your transparency in terms of your overall trading process. But also in the back end, the accountability factor then is completely taken out. I think that's kind of what you're coming at there, I guess, the accountability.
Yeah. So like if you, to me, it's all comes together, whether it's your trading plan, your risk management, your money management, whatever it is. Also, time of day is part of that management to me, and the energy that you're going to focus on that trading on a day-to-day basis. Because also another big thing for me, and I think we talked about this earlier, but reacting to price, we want to react to things. Like I react to trades. I react to situations that present themselves. I'm not trying to predict anything, because in the business of predicting when it comes to trading, it's not going to work out, whether it's non-farm payrolls, whether it's, earnings announcements when it comes to stocks, whether it's the Fed today, making a decision to trade later on this afternoon is purely a gamble. And, there is no edge to that, regardless whether you win or not. And that's the biggest poison to me is traders come across these wins that happen during these timeframes and they say, oh, I can do that again. And then the next thing you know, they do it again and maybe it works again. But then the next 3 times it doesn't work. And then they're in heavy drawdown. So that's where you gotta have a set rules for yourself, as like I like to say, is a foundation. When you break that foundation, when you have cracks in your foundation, your house can crumble. And yeah,
completely agree. Like it's like anything, you have your trading plan, then you have your trade management plan, then you have your journaling, and then if your journaling is dictating or giving you information that is different to how you approach the markets relevant to your trading plan, there's obviously a very, very clear disconnect. And then alluding to that, then that's where all of the issues, all of the accountability measures, the discipline, everything else just kind of, it's kind of like a domino effect. It just comes in the background. Very, very interesting. And I suppose, given that you've talked about the risk and the 1 to 3 trades a day, the 2.5% exposure, would you then look at like scaling in? Would you look for secondary or tertiary opportunities on a single setup, or are you the type of guy, well, I've a 0.5% risk, I'm a one and done, and then just evaluate the performance on that trade?
So usually I have a bigger target in mind with 3 to 4 take profits along the way, and I will scale into a position around a certain area. Yeah, so it's not like all in one area or at one point. I'll have my original entry, I'll have a stop loss, and I'll scale in above that stop loss, the same size of that. Now, when a trade goes into profit, sometimes I won't say that I do this a lot, but there are times where a trade will come back in a little bit, and I might add a little bit more risk on if the market is telling me and reacting a certain way to tell me that it's still trying to go to my actual target. So yeah, there are times where that happens, but again, I like to move my stop up once the market kind of proves to me that, hey, this is the next floor, and then this is the next floor, and then I just kind of move my stop up in regard for that. So then at this point, my risk is off on the trade. It's a risk-free trade, and it's either going to work out for me all the way to target, or we've captured at least something along the way.
Interesting. And then I suppose with that in mind, do you find that affects your risk reward, or do you have a fairly consistent, steadfast risk reward that you like to apply across the board?
My goal, number one, is to always lock in that first R on the trade. So whatever that original risk was. So because as a trader, I understand that the numbers don't lie. If you're not locking in at least a 1-to-1 risk reward ratio, you are far less likely to be successful in this game. So, ultimately there will be trades that will have 3, 4, 5, 6, 7 risk reward available to me. To me, it's looking at it, on a monthly basis, not just on a day-to-day, not a trade-to-trade, seeing like, okay, how many R's did I get this month? And how did that come into, and what was my overall setups over the time? Because you can't, no one setup is the same. So, sometimes there's going to be opportunities where you're going to have a little bit more breathability. Sometimes it's, it just depends. So what I would like to say is that I like to look at it at the end of the month, right? The setups that worked out, what were they, and how many R's did I put in my pocket? I look at it from an R standpoint, not really even a money standpoint to me.
Interesting.
I figure out what my R is, and that's it. And then at the end of the day, it's 15, 20 R's for the month, whatever it is.
And you're establishing consistency through the data by virtue of reviewing the performance management, reviewing the metrics, and then obviously trying to establish, well, if you've had maybe a mediocre month or an average month, how can I refine that? How can I improve, obviously, on the efficiency? And then, of course, equally, if you've had a great month, what have I done right this month that has given me the return that's maybe superseded previous occasions or previous times, which is
right.
very, 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 very interesting, of course, as well. Loving this conversation. This is brilliant. So I suppose then, given your experience, right? So you're talking, well, I'm not going to say 20 years, but we're coming close to it, shall we say?
We're coming close to it, yes.
We're coming close to it. And your experience across the industry, what do you enjoy most about the trading element from your perspective over the past?
To me, trading gives people the ability to make some sort of secondary income within a set period of time. And I will say this again, I don't feel like most people should take a look at this as their full-time job, because it's not meant for everybody. Because the dynamic of trading itself, we go and work a 9 to 5, right? If we go and work that 9 to 5 or whatever that, your hours may be, when you go to work, you do the job, you get paid, right?
Yep.
If you're trading, you go to work, you may not get paid. You may actually lose money. And that's a different, psychological standpoint, right? Not everybody can do that. It's not in everybody's markup. So when somebody becomes a full-time trader, they may not be prepared to understand that pressure, that emotional
responsibility,
and the responsibility becomes too much for them. So that's why I think a lot of traders should stick to their main job, figure out a time that works for them to trade during that time. And that freedom of trading and being able to make, a consistent amount of money over time can be really beneficial to their lives, can really, fast track their ability to do things that they want to do, to, save up for the kids' retirement, whatever, like not retirement, but their college, do whatever it is on the side that they want to do. Everybody looks at trading with these big gooey eyes, Lambos, whatever else. That kind of thing just really just doesn't resonate for me. For me, it's more of like the ability to have the freedom in life to do what you want to do, not worry about, I've got this bill, I've got that bill. Okay, it's getting taken care of. Like. Mm-hmm. Having the flexibility, the financial freedom. So,
and I think that's as well, because the big flex over the last 30 years would have been money, and progression, buying nice things. But I think the ultimate flex nowadays seems to be freedom, flexibility, being able to do what you want when you want, given those opportunities. And I suppose that's probably where a lot of the younger generation of traders, those maybe 25 and younger, that's probably where their mindset is probably taking them now. Obviously, it's great to have a Lambo if you can afford one, but not at the expense of over risking, over leveraging, chasing a dream, and being unrealistic, I suppose, in your targets. In that regard,
exactly,
for sure. And I suppose, given the comments you've kind of mentioned there, with your background, with your own community, with your own experience over many, many years, how would you define a good trader? What do you think are the qualities that good traders coming into the markets today need to have to be successful, to find that edge, to develop that edge, and obviously to maintain it?
So when I see traders that post massive payouts, when they post big percentage gains on option trades, things like that, that scares me, because what that's telling me is that trader is focused on the home runs, etc. And I think that what really makes a good trader at the end of the day is consistency. Somebody that goes to work every day and locks in, a certain number of hours every single day, and that those are locked in, and that they go about their process and they go about their day, and it's just rinse repeat every single day. Because the guys that, do home runs every day, well, guess what? They're going to strike out a lot of other days too. And
high risk, high reward.
High risk, high reward. So, I like to use this metaphor, which is Derek Jeter in baseball. Derek Jeter was not like this huge home run hitter, but he was a singles, doubles guys, RBIs. He was going to give you what you needed at the end of the day for the team to be successful and to win. He was consistent each and every year for his team. And, that's what you have to be for yourself. You have to be consistent, figure out what works for you. And then once you're consistent, just stick to the plan at the end of the day, and not worry about these like big numbers, because it will work out. It'll work itself out in the end. The profits will come, your success will come with the consistency. Everybody focuses on the money. It's better to focus on developing a strategy that's consistent, and then just scaling up your size a little bit over time to get to the point where it's, successfully, the money's there.
Yeah, the money will look after itself in the long run if you implement the correct process. Yeah, very true, very true. Very interesting. I'm loving this. I'm loving this. So I suppose with obviously the changing market dynamics, the past, the present, the future, I'm sure you're probably looking at yourself and saying, well, what have I done right this year? What have I done right last year? Do you set yourself goals and objectives within your own performance management? How do you approach that?
So the number one goal that I seek is, again, not necessarily monetarily. Again, it's making sure that I'm sticking to the plan or the process. And whenever I'm not sticking to the plan or the process, I try to mitigate that in the best way possible. I will tell you and a little bit more about me and my process. So, truth be told, and I don't know if we can deviate from this if you want, but
Yeah, absolutely.
let me kind of give you a little bit more background on.
Mm.
Let me give you a little bit more background on how my trading journey actually went through. So when I initially started, was trading stocks. Then I went to forex and was trading. This was before regulation and everything like that, and there was 400 to 1 leverage. When you were trading back in the day on an account,
Yeah.
and this was in college, and I took an account from like 1,200 to 37 grand in a month and a half. And it was the most stressful time in my entire life. And I said, you know what? I can't do this. I'm gonna have to figure out something else. So then I went to options. And to be honest, I had been an options trader forever. Up until last spring. And then I came across prop firms. I'd come across them before, but the rules were kind of just very, I don't know, it seemed like things
Obscure.
were obscure, very easy to fail you. It just didn't seem like it made sense. But then I came across prop firms and then I realized the potential. And I said, look, I know what I have to do. I have to draw down that consistency that I know is necessary to make this work. I just have to figure this out for me to make it work. And so eventually I was able later on that summer to get my first payout and to get my grounds going again with this process because I saw the potential that was there for prop trading. And then I, showed it to my community because I said, look, guys, I know a lot of you guys struggle with capital, having the ability to put on trades. You're stuck to, whether it's no more than 3 day trades in a week, or you have the cash account and you only required for a certain number of trades with the amount of money that you have. You're also stuck with options. You've got, implied volatility. You've got theta decay. These things that completely, you say you have the right trade on, but ultimately you pick the wrong strike. You pick the wrong, the wrong date, whatever for your contract. Prop trading brought an entirely new way of looking at things that I think is really important for a lot of traders, especially here in the US, because I don't feel like the US market up until recently was very large when it came to prop trading. And it's really, really nice to see the growth. And I've primarily focused our community on growing on prop trading because I believe there is so much potential for traders to grow with prop accounts and understanding, whether you want to trade indexes, metals, currencies, whatever it is, the potential is there. And that's all I do now. I don't really focus on options too much. I trade an option here or there, but my sole focus is, getting these accounts and trying to grow them as I can.
Interesting. I suppose that then brings you to the future. So I presume your goal now going forward over the next 2, 3 years, 5 years is continually scaling up, growing, I suppose, the size of your book of business, maybe across the board, industry standard wise, maybe multiple firms within that. So again, your risk, your exposure is still only ever going to be maybe 2.5% per day, but the size of your book of business obviously exponentially increases as you develop, I suppose, within that. I presume that's exactly what you're referring to.
So yeah. So I'm really trying to grow the number of accounts that I have and then to scale them up over time. That's primarily now what I've turned my focus to now is to doing that. But I also want to be partnered up with firms that make sense. There are firms out there that are very predatory, and I'm not going to name any names, but there's there are firms that are also going to be there for traders, and I appreciate that. So I want to be able to partner up with them and to grow with them and to be able to grow my accounts. And the way I look at it, my friend, is I don't want to trade any one account too much. So I would like to grow, let's say I grow this one account, then I go to my other account, and I'm just constantly rotating back and forth. That way my risk is not across all of accounts. Because if I go through a bad run, if everybody goes through a bad run, I don't want to blow all of them at the same time.
it would be quite a difficult thing to manage psychologically speaking.
Exactly.
Yeah.
Exactly.
Yeah.
So
I suppose the idea of spreading the risk is paramount to everything you really do. And making sure that your exposure doesn't necessarily quintuple. Obviously, of course, as I said earlier, high risk, high reward, but high risk comes at a price sometimes, particularly with streaks in trading, because as you say yourself,
it does.
You have a great week, you can have a great month, but then the same can be said on the other side, I guess, as well.
100%.
Brilliant. Well, JT, thank you very much, sir. That was a great, really, really, really good interview today. We're delighted to have you on, giving your thoughts, your experience, sharing your own feelings, your own strategy, your own approach to the markets. Very, very well constructed, thought out process. And a pleasure to have you on today, sir.
Thank you. Really enjoyed it. Appreciate it.